Well, good morning, everyone. Today is Thursday. What is it, December the 12th? I honestly can't believe it. I have a mental block against the time of year. I'm still in summer mode. I'm still waiting for the summer to start. I'm not joking. I mean, my time clock is totally messed up. I'm just too focused on the market all the time. Dates just don't have an impact on me anymore. All right. China, no news. There's no news. China negotiators are in close communication with Washington ahead of the possible U.S. tariff hike. I don't even know what that means anymore. Why wouldn't they be in close communications? The bottom line is Sunday is a deadline. The odds are they're going to push things back. I hope they're going to push back things. If they do, the market will react very little. If you recall, about a year ago, the market would really react whenever we had a pushback or some type of progress in negotiation. But now it's kind of like the boy who cried wolf. There's just not that much going on. It's expected. So the market is pricing it in more and more and more and more and more. So phase one, supposed to happen on Sunday. I don't think it's going to happen. I don't think it's going to be remotely close to happening. I think they're going to kick things back another few months, and it's going to cause more stagnation, more uncertainty, and more of this. This is the percentage of stocks right now trading above the 200-day moving average in the S&P 500. Now, I believe small caps. Now, I have a theory right now, and I'll show you why, and I'll talk all about it. But I think small caps are going to start leading. They haven't been leading since late August, early September of last year. That's when they began perceiving or sniffing the blood in the water or the trade war. Large caps said, they're too big. They're conglomerates. They're not as dependent on China. But this is the percentage of stocks trading above the 200-day moving average. This is a 5-year chart. Notice what happens every time the percentage of stocks goes to about 75%. We come down. It's hard for the S&P 500 to have more than 75% of stocks doing this. It's just hard. They can't all trade up. Some of them have to be below the 200-day moving average. It's just the ebb and flow of the market. Otherwise, they get stretched out. So I'm not going to tell you what happens every time stocks get above 75th percentile. You look at it yourself. Look at it 10-year. They were a little higher here, but notice the trend's been going lower. Every time we get up to that 75 level, 5-year, look at 5 years. Every time we cross, we just crossed right there. Every time we cross, we peak out and we come lower to cool off. This would put the S&P 500, if we came down here, would put us at 200-day moving average. To give you some perspective, let me show you how that would look. That's how it would look. And that's just a cool off. Now, I don't think we're going to go to the 200-day moving average. I think we're going to go up to about I've been targeting the 3,000 level. This is the E-mini S&P. This is not the SPY. If you trade the SPY, it would be 300. The number wouldn't really change much. It would just be 300. Now, notice I told you on Monday, maybe even Friday, I said we're going to be getting a congestion pattern. I don't see a lot of upside, so I think we're going to have a congestion pattern where stocks consolidate. I mentioned a triangle. I mentioned a wedge. I mentioned a flag. And it looks to me from where I'm standing right here. Let me actually show you my angelic drawings. I'm just messing around here. That's an ascending triangle. Or maybe an ascending triangle closer to a symmetrical triangle. But any way you cut it, any way you slice it, that's a symmetrical pattern. That is a consolidation pattern. This is why I said iron condors, credit spreads, defensive positions, non-directional positions would be where you want the money to be. Now, I'm only getting started. Economic data, jobless claims. Last week, the economic data was off the charts. We were expecting 213 new claims. We got 252. Ouch. That's not good. That's when Trump goes to Jerome Powell and says, I told you so, we're slowing down. Last week, Jerome Powell, based on Friday's economic data, would say, Trump, we told you there's no reason to lower rates. There's no slowdown because unemployment data was just off the rockers last week. So, but this isn't anything really bad, and it's an ebb and flow. But look at the average, 217,000. We're at 252,000. It's getting up. It's getting a little up there. Producers Price Index just came out. We were hoping for a little bit better than flat, but we got flat. It just came out a few minutes ago. Let's see how the stock market's reacting to it. Let's look at the E-mini because that's on right now in real time. So it's actually, the news is better than expected, but still, I'm expecting this type of trading action. Oops, excuse me. I'm expecting this type of trending action to break down. I'm not expecting a breakup. If we have a little breakup, I think it'll come down. Now, let's look at the small caps. Now, I'm getting excited, and I'll tell you why. For the first time since last August 31st, September 1st, I'm not sure, we had a higher high. Look at the S&P. Pay attention. This is important. Oops, not that. Let me just go back here. If you look at the S&P, notice we peaked here. That's the high, and we've been going lower. This high was not as high as this high. It was lower. We have a lower high, but look at the Russell. Look at the Russell here. If you look at the Russell, we're making higher highs. We have more of a flag pattern. Let me show you this. My drawing is not that great, but you could make heads or tails out of it. Either way, I expect a breakdown. The question will be, which asset will remain stronger? Will it be the small caps or the large caps? It's really significant. Why? Let me explain. If the small caps finally continue outperforming, now I'm getting my hopes up, but they've been outperforming the large caps, the S&P, for about 2 weeks now. If they keep outperforming, if we keep seeing this performance, the higher highs versus lower lows on the S&P, that means the small caps are finally starting to assimilate the end of this trade war. And that's really positive, because if the small caps rally with interest rates low, they can really cause this market to rise. Now, I've probably said more than I needed to this morning. Now, I just want to remind you guys, I'm just looking at my calendar here. As soon as I'm done here, I'm going into my trade room. We're going to have a live class. I'm going to be reviewing 3 stocks. These are my top 3 stocks. As a matter of fact, not one of these 3 stocks, but a similar stock that's in this program that I'm going to talk about is up about 60% in less than 2 weeks, maybe even a week. I don't know. I'm going to look at my numbers, but it's happening at 1 p.m. Eastern time, not Pacific time, 1 p.m. Eastern time, all right? That's 10 a.m. Pacific time. You don't want to miss it. I'm going to give you 3 ticker symbols. I'm going to teach you how to trade it. I'm going to teach you a whole new system that involves volume. It is going to be very cool. We're going to combine options, pullbacks, volume spikes, you name it, it's going to be there. This is going to be the hottest thing ever. Don't miss out. I'm literally going to get ready for it as soon as I'm done here. Don't forget, 1 p.m. Eastern time, trade room. 1 p.m. Eastern time, follow the link below this this video. It'll give you all the details. It's all there. And again, I think small caps are going to start leading. And if that happens, we're going to be in a much better shape, because we've been having a broad market make new highs without the small caps contributing. If the small caps start contributing and adding volume again like they always have, it's going to be great. Now, check this out. Small caps have been congesting now for over a year. I thought it was a year. I thought this happened in November. Somebody corrected me and said, hey, Roger, it happened all the way in the summer. Look at this. We've been congesting. The longer the congestion, the better the breakout that follows. And if this starts contributing to the S&P 500, we're going to skyrocket in 2020, especially with the low rates. So you don't want to miss this training. It's happening at 1 p.m. Eastern time. I'm going to talk about all the 3 stocks, the major stocks that are breaking out right now. I'm going to give you the ticker symbols. I'm going to give you the price levels. I'm not going to hold anything back. I'll see you at 1 p.m. Eastern time. We're going to be there soon. Talk to you later, guys. Take care and have a great day.